Imagine this: a company that was once worth $60 billion, praised as one of the most innovative businesses in America, suddenly collapses overnight. Investors lose billions, thousands of employees wake up to find their saving wiped out, and the US government is forced to change corporate laws to prevent something like this from ever happening again. This is the story of Enron, the company that fooled Wall Street, the media, and even the US government. But what if I told you that this entire empire was built on lies, that Enron never actually made the money it claimed, that its executives were stealing millions while telling their employees everything was fine. And the craziest part, they almost got away with it. Today, we're breaking down one of the biggest financial scandals in American history. Let's get into it. Enron started in 1985 in Houston, Texas, after the merger of Houston Natural Gas and Enron. At first, it was just a regular energy company supplying gas and electricity, but under the leadership of CEO Kenneth Lay, Enron reinvented itself. Lay had a vision. He wanted Enron to be more than just an energy supplier. He wanted it to be a global trading empire. So, in the 90s, Enron shifted its focus to energy trading. Instead of just selling gas, it started buying and selling energy contracts, just like stocks on the stock market. And it worked, at least on paper. Enron became a Wall Street favorite. Its stock price skyrocketed, and by 2000, Enron was listed as the 7th largest company in America with reported revenues of over $100 billion. But there was one small problem. Almost none of this was real. So how did Enron make billions without actually making billions? They used something called mark-to-market accounting. Let me explain. Normally, companies report profits when they actually earn money, but Enron, they predicted future profits and reported them immediately, even if the deals were complete failures. For example, let's say Enron signed a 10-year contract to supply electricity. Even if the deal would actually lose money over time, Enron immediately recorded it as a huge profit on the same day the contract was signed. On paper, it looked like Enron was making billions. In reality, they were hiding massive losses. And if anyone questioned them, Enron executives would just move the losses somewhere else. This is where it gets really crazy. To hide its financial problems, Enron created fake companies called special purpose entities. These companies existed only on paper and were used to absorb Enron's debts. Let's say Enron lost $5 million on a failed project. Instead of reporting that loss, they would transfer it to SPE and pretend it didn't exist. This way, Enron's financial reports always looked perfect and their stock price kept rising. And the mastermind behind this fraud, Jeffrey Skilling, Enron's chief operating officer, later promoted to CEO. Skilling had one rule: always meet the earnings target, no matter what. This means that employees were under insane pressure to fake profits and bury losses. But by mid-2001, cracks started to appear. In August 2001, Jeffrey Skilling suddenly resigned as CEO. He said it was for personal reasons, but behind the scenes, he knew that Enron was about to collapse. Then in October 2001, Enron announced the massive $680 million loss out of nowhere. Investors panicked. Wall Street freaked out. A few weeks later, an investigation revealed the truth. Enron had been lying about its profits for years. Stockholders lost billions. Employees lost the entire life savings. The company that was once worth $60 billion was now worth nothing. And on December 2nd, 2001, Enron officially declared bankruptcy, the largest corporate bankruptcy in US history at the time. So what happened to the people responsible? Kenneth Lay, Enron's founder was convicted of fraud but died of a heart attack before serving his sentence. Jeffrey Skilling was sentenced to 24 years in prison, but later had his sentence reduced and was released in 2019. Andrew Fastow, Enron's chief financial officer and the mastermind behind the shell companies, was sentenced to 6 years in prison after admitting to fraud. But here is the real question. Did they really pay for what they did? While Enron's top executives went to prison, thousands of employees lost their retirement savings. People who had worked for Enron their entire lives woke up one day to find out that their pensions were gone. And what about the investors? They lost over $74 billion in just a few months. The Enron scandal was so massive that it forced the US government to change corporate laws. In 2002, the Sarbanes-Oxley Act was passed, making it harder for companies to commit financial fraud. But the real lesson here, corporate greed can destroy everything. Enron wasn't just a scam, it was a wake-up call for the entire financial world. And even though Enron is gone, similar scams still happen today. So the next time you see a company that looks too good to be true, it's probably is. So Enron collapsed, laws changed, and Wall Street learned its lesson, right? Wrong. Scandals like this never stop. If you think this was just a problem from the early 2000s, think again. FTX, Theranos, WeWork, different industries, same story. Companies built on hype, fake profits, and blind investor trust. And here is the scary part. The next Enron is probably happening right now. Maybe in tech, maybe in crypto, maybe somewhere we don't even expect. So how do you protect yourself? Here is what most people won't tell you. Never get emotionally attached to a company. The moment you believe a company is too big to fail, you've already lost. Watch what executives do, not what they say. If they're dumping stock while telling the public it's going to the moon, that's a major red flag. Follow the money. If it's a company profits don't match reality, something shady is going on. Always look for actual cash flow, not just expected future revenue. Don't trust media hype. The same analysts who called Enron the future were the first to abandon it when the truth came out. The media loves success stories until they don't. Most importantly, ask yourself, if this company disappeared tomorrow, would the world actually lose anything? If the answer is no, you might be looking at the next financial illusion. Because in the end, Enron wasn't just a company, it was a symptom. And as long as greed exists, there will always be another Enron. So what do you think? Is another financial disaster coming? Have you ever fallen for a scam like this? Let me know in the comments. And if you want more insane financial stories, subscribe, because trust me, this isn't the last time we'll see something like this.